Hey there, it's February 14th. Wanted to wish everybody a happy Valentine's Day. Wanted to give you a little bit of an update on what's affecting mortgage interest rates. A lot of times people see, oh, the Fed's raised their rates. Mortgage rates are going to follow exactly the same. And that's not true. Probably the biggest factor right now affecting rates is just the inflation numbers. So rates really started to go up last year when inflation was rising. The Feds were raising their rates to try to slow it down, but that wasn't directly correlating with our rates going up or down. Then kind of the end last year and to start this year, the inflation readings were actually starting to look good. Numbers were coming down, interest rates were starting to stabilize and even come down a little bit. Well, recently things have kind of changed. A few weeks ago, we had the jobs report. They were expecting about 188,000 new jobs created, and the actual number came in at 517,000. And then today, the CPI, which is the Consumer Price Index, it fell a little bit, but it was actually higher than expected. And so the CPI is actually inflation. Talks about consumer goods, food. It also talks about like shelter. So that number came in a little bit higher than what everybody was hoping, expecting. What that means is people are still working, which is a great thing. People are still working. People are still spending money. Supply is down. Demand is still there. So prices are continuing to increase. Maybe not as quickly as they have been, but they still are going up. And so that's kind of just bringing a lot of fear when it comes to rates. And so rates were going down, and recently over the last week or two, they started to go back up. We went from, at one point, we were in like the low sevens. Then we got down all the way to the low sixes, and now we're back up into the kind of mid to higher sixes. So the inflation number just came out. Won't get another inflation number here for another month. So we're kind of looking for that to come down a little bit just to stabilize. We'll see if they do any adjusting with the jobs report. But really buying a house, it's not all about the rate. It's what fits your budget, kind of what fits your family. What are your goals? And that's what I'm here for. Of course, the rate makes a deal of what your payment and maybe how much you can afford. But home prices in Billings are still continuing to increase. There's still demand and there's not enough supply. So if you're looking to buy, if you just have questions, want to get on the right path, I would love to sit down with you and chat. We can come up with a game plan and just talk about the numbers and see what we can make happen. It's better to be prepared than unprepared when you're ready to do this. So if you have any questions, please give me a call, shoot me a text, shoot me an email. Hope you have a great day.